If you've ever filed an insurance claim or even thought about filing one, you've probably run into two confusing terms: replacement cost and actual cash value. They sound similar, but they pay out completely differently, and choosing the wrong one can leave you with a payout far smaller than what you expected. So today, I am going to break down exactly what replacement cost is, what actual cash value is, how each one works using real-life renters insurance examples, and how companies like Lemonade illustrate these differences inside their coverage details and claims process. I'm Erin from InsuranceWise. Let's get started. Before we jump into the actual definitions, I want to set one expectation. Most people think renters insurance is only about covering big disasters, fires, huge leaks, but in reality, the difference between replacement cost and actual cash value shows up in the small everyday losses too. A spilled drink on your laptop, a stolen bike. That's where the payout method becomes the whole story. So as you listen, don't think about insurance terms, think about your actual life and what it would take to replace the things you use every day if something went wrong. What you're really insuring. If you want to check Lemonade's current rates, walk through their quote process, or see exactly how replacement cost shows up in a real policy, you can click the link below and it'll take you straight to their homepage. It is the same page I used in all the examples today, so you'll be able to follow along in real time. When people think about renters insurance, they usually picture it protecting big disasters like fires or major water damage. But what it actually protects day to day are things you rely on constantly: your laptop, your headphones, your guitar, your TV, even your clothes, and the small things you forget you own until they're suddenly gone. The part most renters never realize is that the way these items get replaced depends entirely on one detail inside your policy: whether your coverage uses replacement cost or actual cash value. These two approaches may sound similar, but they pay out in completely different ways, and that difference can determine whether you walk away from a loss feeling supported or stuck trying to cover the rest out of pocket. Understanding the difference is the key to knowing what kind of protection you actually have. Actual cash value. Actual cash value is the version of renter's insurance that often surprises people, and not in a good way. When insurers use actual cash value, they are not paying for what it costs to go buy a brand new replacement. They're paying you what your old item is worth right now after years of use. So let's imagine this. Imagine you bought a laptop for $1,200 a few years ago. You've used it every day. It's a little slower. Maybe the battery doesn't hold the same charge anymore. If it gets stolen today, actual cash value does not look at the price of a new one. It looks at what your used laptop would sell for in its current condition, and it subtracts years of wear and tear. So instead of getting $1,200 back, you might receive only $300 or $400. And that's how actual cash value works for almost everything. The payout is based on what those items were worth as used items, not what it costs to replace them. The older your belongings are, the less money you receive. This is why ACV policies often look cheaper on the surface. They cost less per month because the insurer knows they're paying far less during a claim. It's a lower monthly bill, but also a much lower safety net when something actually happens. Replacement cost. Replacement cost works in a completely different way. Instead of asking what your belongings were worth as used items, replacement cost asks a much simpler question. What would it cost this person to replace this item today? If your $1,200 laptop is stolen, replacement cost looks at the current price of a similar new laptop. If that's what you would need to get back to where you were before the loss, that's what the policy pays. There's no penalty for age, no deductions for wear and tear, and no depreciation formulas that reduce your payout. Whatever it costs to replace the item today is what you receive. And this applies across the board. If your guitar is damaged, you're paid the amount needed to buy a new guitar of equal actual quality. If your TV is lost in a fire, the payout covers the cost of a new one. Replacement cost often costs a few extra dollars each month, but the difference it makes during a claim is enormous. One incident, even something small like water damage into a laptop, can instantly make up for months or even years of slightly higher premiums. The easiest way to understand the difference is actual cash value reimburses you for what your belongings were worth in their used condition. Replacement cost reimburses you for what you would need to actually replace them today. One helps you recover fully, the other helps only a little and leaves you covering the rest on your own. For most renters, replacement cost isn't just nicer, it's the only version that actually puts them back on their feet after something goes wrong. To really understand the difference between actual cash value and replacement cost, it helps to look at the everyday situations renters actually deal with. The things that happen quietly and suddenly without warning. Picture this first scenario: your bike is locked outside your building and one morning it's simply gone. If your policy uses actual cash value, the insurer looks at the age of your bike, the condition it was likely in, and what a used version of that model would sell for today. Maybe you originally paid a few $100s, but with ACV you might receive around $100, sometimes even less. That small amount reflects what the bike was worth as a used item, not what it will cost you to replace it. With replacement cost, the experience is completely different. The insurer doesn't ask what your old bike was worth, it asks what it will cost to get you a new version of that same bike today. If that replacement is $300 or $400, that's the amount they will pay. You walk away with enough money to actually go and buy the same bike again. Let's take another common scenario. There is a leak in the apartment above you, and water drips directly onto your desk overnight, destroying your laptop. Under actual cash value, the insurer accounts for the age of your laptop, how technology prices drop over time, and how much a used 3-year-old laptop would sell for on the market. The payout reflects that. It may not be enough to even come close to buying a new one. Replacement cost responds differently. It recognizes what it costs to function today in the real world. If replacing your laptop requires paying full price for a new one, that is exactly what the policy is designed to reimburse. You are not left supplementing the remaining cost out of pocket. And then there's the worst case scenario renters face: fire. Even a small fire can destroy furniture, electronics, clothing, and sentimental belongings. With actual cash value, the payout often ends up being shockingly small because every single item is depreciated. Your couch, your TV, your shelves, all valued as used goods. It's extremely difficult to rebuild your space with the money you receive. Replacement cost is designed for this exact moment. It reimburses you based on what it costs to replace everything with new versions today. And in a situation as overwhelming as a fire, that difference isn't just financial, it is emotional. It determines whether you can put your home back together in a way that actually feels like home again. And these scenarios make one thing very clear: the price you pay each month doesn't matter nearly as much as the payout you receive when something goes wrong. Replacement cost helps you recover fully. Actual cash value helps only partially, and sometimes barely at all. How claims work with RC versus ACV. Now let's talk about what happens in the moment you actually file a claim, because this is where the experience becomes real. Companies like Lemonade have modernized the entire claims process. Instead of filing paperwork, waiting for phone calls, or scheduling inspections, many renters can submit a claim right from their phone. You described what happened, upload a quick video, and the system begins reviewing it immediately. Lemonade's AI is trained to evaluate common claims, verify details, and in many cases, approve payouts on the spot. It's fast and it removes the stress that traditionally comes with filing a claim. But even within the same smooth process, the type of policy you choose dramatically changes what happens next. If your plan uses actual cash value, the system will automatically factor in depreciation before calculating your payout. It will determine the age of your item, how much it was likely worn over time, and what someone would realistically pay for it today. And that reduced amount is what gets deposited into your account, even if replacing the the item will cost much more. If your policy uses replacement cost, the experience feels completely different. The claim goes through the same simple steps, but the payout reflects the real-world cost of buying that item new. You're not punished for the age of your belongings, you're not left doing mental math or wondering how you're going to cover the difference. The insurance does what renters expect it to do, it makes you whole again. Two people can go through the exact same claims process with the same company using the same interface and walk away with completely different outcomes. One person receives a small fraction of the item's value, and the other person receives enough to fully replace it. And the only difference is whether their policy uses actual cash value or replacement cost. And this is why understanding your policy is not optional, it is essential. Because in the moment that you need your insurance the most, the payout method becomes the entire story. Now, before we talk about the price, I want to pause for a second. A lot of renters make decisions based on only the monthly cost. Feels like another bill they just want to get over with, but the payout method, ACV versus replacement cost, is the part that determines how protected you really are when something actually happens. So instead of thinking about which one is cheaper, start thinking, if I had to replace my laptop, my TV, my phone, what kind of help would I want? And that mindset makes the cost difference make a lot more sense. Cost difference is RC worth it. Replacement cost coverage does cost a little more each month, but the extra few dollars are usually insignificant compared to what it can save you when something actually goes wrong. Think about the items you use every day: your laptop, your phone, TV, camera gear, even your gaming console. These are the exact items that would be expensive and inconvenient to replace out of pocket. With replacement cost, one single claim can make up for years of slightly higher premiums. You get enough money to go out and buy a new version of what you lost. Not a used one, not the depreciated value, but a true replacement that lets you get back to normal immediately. Actual cash value, on the other hand, is cheaper upfront, and that's why a lot of renters choose it without thinking about what it actually means for them. The problem is that ACV policies often leave you with a payout that doesn't come close to covering the cost of replacing your belongings. So while you might save a few dollars a month, you could end up spending hundreds, sometimes thousands, out of pocket after a single claim. So the real question isn't about comparing monthly prices, it's asking yourself a much more practical question. If something happens and I need to replace everything quickly, how much money do I want to receive? That answer alone usually points straight towards replacement cost. How to check which one you have. A surprising number of renters don't actually know whether their policy uses actual cash value or replacement cost. It's not something most people think about until they're filing a claim, and by then it's too late to change it. The easiest way to figure out what you have is to look at your coverage summary. Every insurance policy lists payout terms somewhere in that document, and you want to scan specifically for the wording, replacement cost, or actual cash value. If it doesn't say anything at all, it's safest to assume the policy defaults to actual cash value unless you remember paying to upgrade. This is one of the reasons Lemonade stands out. Replacement cost is typically built right into their standard renter's policy, so you don't have to worry about missing fine print or hunting for an upgrade option. It's part of why their coverage feels more modern and renter-friendly. It is built around how people actually live today and not outdated assumptions about depreciation. Knowing which payout method you have gives you clarity about what to expect during a claim, and if you check your policy and don't like what you see, this is the perfect moment to switch before anything actually happens. So which one should you choose? If you're renting an apartment, a dorm, or a townhouse, or even a tiny studio, and you own anything that would genuinely hurt to replace, a laptop, phone, TV, guitar, camera, anything you rely on every single day, then replacement cost is almost always the smarter option. It's the option that actually puts you back in the same position you were in before the loss. You get the money you need to buy a brand new version of what you lost at today's prices without having to dig into your savings. But if you're in a stage of life where you truly don't own many expensive items, or you're on a very tight budget where every single dollar counts, then an actual cash value policy might work for you. The important thing is understanding what you're agreeing to. With ACV, you are choosing a lower premium in exchange for a much lower payout if something happens. You'll receive receive the value of your belongings after depreciation, not what it takes to replace them. Replacement cost is protection that helps you rebuild your life after a loss. Actual cash value is a discounted payout that may leave you covering the difference out of pocket. The choice comes down to what you own, what you can afford, and how much support you want if something unexpected happens. So that is the real difference between replacement cost and actual cash value, explained in a way that actually matches how claims work in everyday life. If you want to check current renters insurance rates or see how much replacement cost coverage would cost for your unit, I'll leave a link below to the same provider used in the examples today. If this video helped, subscribe, give this video a thumbs up. I'm Erin from Insurance Wise. Thank you guys so much for watching, and I'll see you in the next one.